How are you doing?
Good, good. How are you?
Good. You're
It's
used
good
to
to see
working
you.
from home or?
Yeah,
Okay.
like everybody, I'm actually in Dubai right now, and Dubai is in a lockdown, so no one's
Yeah.
allowed to leave the house.
Yeah, same here in Barcelona where well it's called confinement here. I mean that's a Spanish word, confinamiento.
Yeah.
And yeah, no exercise outside, nothing. It's only
Wow. Okay. Well, yeah, I guess it's the same thing. Yeah, even here, but I think in the UK they're allowing people to at least go outside an hour a day and stuff.
yeah, and I like running, so
Okay.
I
Okay.
miss that.
Great. Great. Well, hopefully they will open that up for you soon, so you can get out there and get some jogging in.
Yeah, perhaps in 2, 3 weeks. Things are slowly improving here. Are they improving in Dubai?
I hope so. I hope so. There's not much information going back and forth between the government and us, except they're working on it day and night. I can see actually outside my window that the entire streets at night are being disinfected by trucks with spraying and everything. So they're doing extensive work.
I see. Well, at least here they're just deserted, and you occasionally see the police, but no disinfection. So,
Okay, okay, all right. Well, yeah.
all
Let's
right.
hope this whole thing ends. But it's been great for us in the financial markets. Pros and cons on both sides, right? So
Yeah. That was sort of my first topic to kick it off. We have volatility, finally.
yes, yes, finally, yes,
So, I mean, I've been frustrated for years. Well, most of the time, especially with euro dollar.
yeah.
I can't say it's the most exciting currency pair, but we're seeing movements also there right now. And is this a pair you like to trade or to analyze? And
I go through many of the pairs, not specifically
hmm,
to just one currency pair. I don't go into the extreme exotics like Swedish krona or anything like that. But I stick to most of the majors, and then
hmm.
some of the, I guess, major exotics like New Zealand yen and pound New Zealand and stuff like that.
Oh, I see.
So basically within the 28 pairs realm, the main 28 pairs.
Ah, okay. So these are the major currencies and their cross and
Correct, correct.
yeah. And today, when we're recording this interview, the big story, I think we can agree, it's oil. Oil is
Yes,
collapsing.
yes.
Well,
Yeah.
what do you think? Do you see this as an opportunity for traders, or is it
It is.
just too
It is.
wild?
On our desk, we've been looking at New Zealand CAD buys all morning because of the oil.
Hmm.
So I don't necessarily trade oil myself, but the traders at my desk, what we do is we do have a big influence on with oil because we trade the CAD uh, very extensively because of the oil. So we've been short on CAD all morning basically because of that.
Hmm. Short, you mentioned against the New Zealand dollar. I think it's because they announced they'll be easing the lockdowns there. I mean, this morning.
Yeah, so we had some good news this morning on New Zealand, right? Like we had some like pretty good news on New Zealand. So based on that, I'm going with the flow of the new momentum coming into the markets from the CPI that released, put together with the oil and how it affects Canadian dollar. New Zealand CAD was our choice of pair. So some of the traders on the desk made some decent money. I wasn't able to get in, unfortunately, but I've been on the sidelines. But no opportunity for me today. I didn't get filled.
Yeah, I think for many retail traders, it's often very hard to know, well, take the decision not to enter a trade, to accept that the train has passed, no?
Right. Right. Yeah. That took a long time actually to train for that. Instead of like, oh, it's going, I should just get in now yeah, because it's going. It took a long time to train to not do that.
Yeah, and sometimes I had it myself. You're frustrated. You say, "Okay, I'll try the restrained way." I missed that ship has sailed, and then the ship continues in the same direction, and I could
Yeah.
have
Yeah.
just
It's a horrible feeling. It's a horrible feeling.
yeah. We talked about oil. Let's mention
Yeah.
gold, which has also been one of the stars. Now it's under 1700, but
Correct.
it certainly has a good crisis, as they say. So What do you think? Do you think we have more upside potential there, or is it?
Well, the same thing I'm doing with gold as I'm doing with oil in relation to CAD. I'm doing gold the same way in relation to Japanese yen. What I generally do, in times like this, because it's a fear on, fear off kind of risk on, risk off kind of situation in the markets, I watch very closely how the Aussie, New Zealand work against the Japanese yen and the gold. If I see synchronicity across the board on these pairs, then I know the entire market's in a fear-based or not fear-based market. And then based on that, if I am going with a risk-off scenario, which means the markets are in panic mode, then I want to go mainly with either gold or yen. But I don't trade gold myself. So I go mainly for yen strength during those times.
Sort of the classic, what used to be called, or well, still is a carry trade. I mean, in 2007, it's either you're long risk,
Correct.
Aussie against the yen or Kiwi against the yen, or the other way around.
There you go. Yeah, Aussie yen and Kiwi yen has been one of the most fruitful pairs for us in January and February, record months for us. So it's been very, very, very beneficial for us. So
Yeah.
we're still going with the yen as risk off or risk on based on the situation.
Mm-hmm. I see. At some points in March, when there was a crash of financial markets, it seemed that the classic safe haven, the yen, it was sell everything mode. Everything went towards the US dollar, and even the yen surrendered to the king.
Yeah.
We're now back to normal. Do you think this situation will last?
No, I still feel another swing coming. I'm watching very carefully for any good news to come out, because I do want to take a reaction off of that for going for Aussie strength, New Zealand strength, and yen weakness, because any sign of recovery is going to be a very hard recovery. Just like when they initially talked about a potential vaccine and how the markets dramatically reacted. So I think people are on standby waiting for a good news like that to actually show up, so they can get hungry and back into the market. So I am waiting for that first initial reaction to come in. If that turns out to be a fake or fades out, then the second and third one, I won't attempt that. But I am looking for the first one that's major.
To the upside, I mean, to the risk-on direction.
To the risk-on side, yeah. So any kind of news of governments are now comfortable with this, WHO saying, okay, we're good, or, vaccines have been created, it is now official, stuff like that.
Yes, I agree. Yeah, last week we've seen that with remdesivir, if I'm pronouncing that correctly, the pharmaceutical medicine by Gilead, and they said they had positive results, but the company itself tried to calm things down, said it's only initial, it's not a randomized controlled. It didn't matter for markets. It was risk-on mood.
So stuff like that. If I see something a little bit more concrete, then it's one of those where I would get in and try to hold it as much as I can, given the market structure. But those are the things I'm actually waiting for. But for now, I've just been day trading until that time comes along to get back into swing mode again. So
I see. And I guess this volatility will last for quite a bit.
I'm loving it. I don't mind it at all. Like, of course, the reason why it's here is not good, but I don't mind the volatility at all.
It's been
quite nice.
It's been offering quite a few opportunities. And some people I read in the UK, they missed the days that Brexit was high on the agenda.
Mm-hmm.
So of course, significant issues, but incomparable to the current health crisis.
Right.
And that's when Brexit moved the pound quite a bit. Brexit talks have been resumed.
Correct.
Do you see Brexit returning to impact the pound, or is it just coronavirus?
I think coronavirus will take the lead for now as the major fundamental driver, because even economic numbers are getting hit really badly with coronavirus. So even if you have like very, very good economic reports coming out for a certain country, it's like, well, it's expected, but coronavirus happened, so we're just going to continue being weak. Like, so it's being overruled a lot by the coronavirus situation, unfortunately. So it for me, that's like the major fundamental thing. So more than watching economic numbers, I'm actually trying to keep up with what's the status on the virus. And what am I looking at? Is it real news or is it like artificial news? So because there's a lot of those as well. So trying to stay on top with good sources of information.
What sources or what kind of news are you focusing on? Are these health statistics or?
No, you know, between me and a couple of the traders, we use the Bloomberg terminal. We use some news information from Financial Times. We read a little bit on FX Street if something comes up there as well. But we're trying, for the most part, just looking for objective information rather than opinions. The opinions we just scratch out. We don't really care. It's the objective ones that says, here's what happened, period. Now it's set in stone. Instead of, I think when this happens, this will happen. I think when that happens, this will happen. I can't do anything with that information other than panic or get greedy. That's it. So there's no point of me reacting to those.
Yeah, I agree. I think the best economists paid by the best banks, they're basically putting their finger in the wind. I mean, when it comes to GDP forecasts or
right.
No idea.
No idea. Yeah, that's the best thing. It's the best thing. Just we'll see, you know.
Yeah, and with uncertainty, we have, of course, more volatility.
Absolutely, absolutely.
So Brexit will likely stay on the sidelines. Moving here to the old continent, we have issues between northern and southern countries about corona bonds, about what to do next. Of course, the main issue is, of course, the virus, and that's what's causing these debates. But are you following these kind of news or?
No, I'm mostly following the increase and declines of the numbers of infected versus the deaths. So I'm following most stuff like that because that is more objective on how a government can respond to those kind of numbers, and whether an increasing in numbers that will set a stage of panic in terms for officials. So that's something more I'm working with because those are set numbers. Obviously, there's a lot of talks about those numbers being skewed, but whatever the case is, it is those numbers that is being worked off of. So, you know, we'll just have to see based around that.
Yeah, I mean, the economy depends on health, so better look at health. Yeah.
Correct. I agree.
I wanted to ask, well, we're talking about news, of course, in the world of trading, you can make an too abstract division between technical and fundamental traders. We talked about the news, and I've seen your videos. So you lean more towards fundamentals, or how would you divide your?
I'm more towards technicals, but I like to stay aware of the fundamentals.
Oh, okay.
However, I won't have a technical position if my fundamentals are disagreeing with it. So I'm basically, if you want to put it in a nutshell, I do both, but mostly technicals with an agreement with the fundamentals like that. But a lot of the work is done on technicals.
Convergence, convergence between the technicals and the fundamentals, I guess.
Yeah,
that works best.
Yeah, I'm always trying to stack the odds in my favor because as a trader, we always have this idea of if you really anticipate what the markets are going to do, then you're basically predicting what it's going to do. With a prediction comes with a number of risk. And as traders, our job is to reduce the risk. So if you reduce the risk, then the only way to do it once you get a little bit of confirmation, but too much confirmation basically means you're basically inside trading. It's like, so to mitigate that risk, you got to find that fine balance between how much odd is in your favor, so you can play the risk to reward and sort of accept that you are going to be wrong at times, and just accept it and work with that rather than this needs to work, this better work.
Yeah, indeed. So in terms of technicals, do you have favorite indicators or time frames that you think are useful?
No, for time frames, I'm generally on the 60 minutes. When I'm day trading, I go all the way down to the 3 minutes. But
Oh, well.
I will always work around the 60 minutes at all times. And I don't use indicators per se. I have some moving averages on my charts, but it's more for just a visual representation of what am I looking at? What's the overall flow? So it's not used to trade, get in or get out, but it's just to get a visual representation. So mostly price action, watching how the markets are responding, support resistance, certain levels based on volume, based on market structure. So a lot of price action stuff, basically.
I see. Yeah, price action, but not. Your charts aren't full with Fibonacci's and
Oh, no.
moving averages and well,
Not
just
at all.
moving
Not at
averages.
all. Not at all. People can look at my chart and be like, it's peaceful. It's calming. There's not too much there to drive you crazy.
Yeah, and too many indicators. It can look pretty. It can look like, well, modern art, but
Sure.
not very useful.
Absolutely. It when you have a lot of indicators, it's only useful to the guy who's using them. Nobody else is probably going to understand what's the thought process going behind the person.
Yeah, and needs to be explained with arguments. I mean, why, and
Correct.
not too complex. I
I
see.
agree.
So use the 60 minutes sort of as a guideline and 3 minute.
Yeah, for entry points, for me to get in, for me to use my stop around the 3 minute levels as well, so I can, take trades worth at least 2, 3, 4 R's on average, risk to reward. So I'm generally following those guidelines of I need to get on average 2 or 3 or 4 risk to my reward, and try to get something done on a daily basis. But there are times where I don't get something done. Today is one of those days so far. I might do something in New York after this interview, so we'll see. But I've booked this time for you, so I'm here. Whatever you need, I'm here.
Thank you very much. Yeah. Well, it's apart from oil, which is in a world of its own. Looks
Yeah.
like a relatively quiet day. So, but normally, I mean, in the recent months, I think volatility picked up somewhere in late February.
Yeah.
Do you find yourself trading every day or almost every day, or?
I'm generally trading almost every day, even before the volatility kicked in. It's just the profit potential has skyrocketed compared to before. So that's always been there. So what I did was in January and February, I went all out. I was trading a lot with size because the volatility was here. I was trading a lot bigger size, a lot more frequently. I was down to the 3 minutes, even 1 minute at times. And I documented my entire process. So I put it up all on Instagram and YouTube. So for a whole 60 days, I've traded day after day, every single day. And, I've had decent 5-figure days very regularly. So very happy with those during the months of January and February, even early December. So it was quite nice.
Yeah, it's very different from 2019.
Yes, very, very different. But March slowed down a little bit because as corrections started to come in, we started to see a little bit of a risk-on environment back and forth. So March, I went back to day trading and no more positions for holding. It's more of a in, more of a out. So stuff like that.
Oh, I see. And you mentioned you're posting things on Instagram. Do you find Instagram as a useful tool? Also, I mean, for me, it's more related to food and travel. But
Yes, it
yes.
is. My marketing team said you need to be on Instagram as well. Show lifestyle, show this, show that. Like, okay, I'll do it. I don't say no to anything. I always want to try it. I tried it for a few months. I'm like, I'm attracting the wrong crowd here. Instagram is like the crowd of Ferraris and Lamborghinis and stuff like that. It's not for me. That's not my cup of tea. I trade. I like to trade well, and that's the reason why I trade. Is to trade well, is not to generally see how many keys I have and how many cars are in the driveway. I don't get interested by that.
No, me neither. Here in Barcelona, you don't need a car. Well, no, nobody needs any kind of transport.
Right.
But I see. So in our email conversation before, you mentioned that you're doing webinars during the week. Is it interactive? Do you get questions from traders?
Yeah, absolutely. So we do webinars like once every 2 weeks. A little over 1,000 people attend every single time. I do some webinars with FX Street as well, some public ones, some private ones. I'm also a premium speaker with you guys at FX Street. So I'm around several times a month publicly speaking on webinars, but we'll generally pick a topic and go extensively in that, whether it's support resistance or simple stuff like trend lines or ranges and stuff like that. Because I feel the general concept of basic part knowledge of trading is all an illusion for people. Like, so when I have a lot of emails coming to me, Navin, I'm having trouble with trading and I took this trade and it didn't work for me. And then when I look at the chart, it's like, yeah, but all the basics are wrong, And I think the idea of the average public is basic is for children. I don't want to learn the basics. I just want to go into the good stuff. Just tell me how to enter.
Yeah.
That's the main concern for many folks is how do I enter? Where do I get in to make some money? So the whole foundation is messed up, unfortunately.
Yeah, I think human nature looking for shortcuts.
Yeah, exactly. And in a way, it's like, okay, let it be like that. Let them look for the shortcuts because the market has a 95-5 ratio because of that. And it's not a bad thing, actually, if you look at it from the flip side. So it's actually okay. Or those who don't want to put in the work, fair enough. The market will judge the outcome at the end. So,
yeah, indeed. With the rise in volatility in recent months, have you seen? Did the questions change from viewers?
So now the questions have the emails that are coming in to me now, or any comments coming in. The questions have switched to there's a move that happened 200 pips. How could I have grabbed that? So when you go to answer these questions as someone sitting on this side, it's like, okay, I can get you the answer easily, but what happens when the volatility changes? Then I'm responsible of giving information that doesn't work, 3 months down the line because the change in market structure has changed. So there's a lot of education that's missing on when do you not do something. I think everyone's focused on what do I do, but there's no training online anywhere that tells you at this point you don't do this anymore. And I think that's what's missing for a lot of education. Everything's do instead of don't do it at this time.
Yeah, I think it's I agree. It's and that's related to looking for the shortcuts because you want to do something and it's always I think it's what they teach in business schools or wherever, that you have to find actionable stuff. So looking for action.
Yeah.
But I think that also deciding not to enter is being active, is taking a decision. So
I agree.
Needs to be studied as well. So
yes, absolutely.
I see.
I hope you don't mind me drinking some coffee while we're having this interview.
No, I also drink too much coffee, so
okay, great.
Do you have any? You talked about traders and bit of mistakes. Do you have any tips for traders in these volatile times, or in general? I mean, apart from what you've already said.
Yeah, actually, for any trader, beginner, veteran, seasoned, volatile markets, not volatile markets, there's only one common thing that I think every trader that I've seen who do really well versus those who don't, is the ability to do some post-analysis. Is to, when you're done with your trade, don't just say, okay, it's done, let me look for the next opportunity. Find out what happened. Is it a good trade? Did it go well? Did it go bad? Why did it go well? Can you do more of it? Why did it go bad? Can you fix it? Can you solve the answer? Rather than saying, yeah, but the markets are still on, I need to find the next trade. There's a lot of people who will just finish the trade and go to the next one and the next one, and then look at their whole account balance and be like, this strategy doesn't work for me. Next strategy. So it's if you do that, then even if you come across a good strategy or a good edge, I don't think there will be a future in trading, because you won't be able to learn from your own habits, because a trader only is good as not the strategy he or she follows, but how he adapts his personality with that strategy and saying, I can do this, but I like to do it in this way. And that works for me well. That's, now you're becoming a trader. You're expressing yourself in your own unique way into the market, because there's no right and wrong answer in the market. So, but you have to find out what you're good at.
Yeah,
So
and
I think checking your own trades, that would be the one main thing, is don't forget to look back on your trades.
Okay, that's sound advice, and especially in volatile markets where there's always the next opportunity, the fear of missing out.
Yeah.
So.
And it's normal. I do it all the time also. I always have this fear, I'm going to miss out too. But, you just have to calm yourself down and be like, every time you do this, it's not healthy. Why? Like, calm down. What happened to your last trade? Let's figure that out first. So.
Yeah, that's human nature. And I guess it's sometimes hard to overcome ourselves, but it's something we can learn, I think, to have a bit more restraint.
Yeah, there's like a famous saying that the more you're conscious about what you're trying to fix, you will still make the same mistakes, but every now and then you will reach one day when you will stop yourself and be like, I'm doing the same mistake again. I have to watch out. So the more you're conscious about the mistakes you're making and you're reminding yourself over and over again, you will still make the same mistakes, but you will get better at stopping it before it happens eventually.
Yeah, you'll improve your odds of
catching it better before you do it. Yeah.
I see. Okay. Anything else you would like to, another tip for traders or something worth mentioning in markets or?
Yeah, so it is a busy time. Obviously, those of you who are seasoned traders, obviously, I don't think there's much you want me to say to you guys apart from, cash in as much as you can at this time, but be careful of the shift in volatility, and stay on top of any good news for coronavirus to make sure you don't get caught on the wrong side with your big size. Because the more money you make in this market, obviously the idea is make more, even more. But maybe you should work on an opposite spectrum of a reverse pyramid. You can start big and then go smaller and smaller and smaller, instead of flipping the pyramid upside down and saying, I'm going to start with this amount of size or lot size or whatever, and I'm going to get bigger and bigger because each trade is profitable. So if you keep getting bigger and bigger, then you're in for some money management disasters. So be very, very careful with that. Make your money, but be very careful in this market, because it will take more than it will give if you're not careful.
Yeah, I think for traders who seasoned and they're doing well, the tendency indeed is to only enlarge positions and not. And the way to scale down is only if you're hit. I mean, in too many cases.
Yeah. And we have to stay on top of our brokerages as well. Like, I know my brokerage every now and then sends out messages saying they're requiring more margin for trades now because they want to stay safe as well. So, I had to reduce down my size a bit too every now and then because of that margin requirements has increased so much. So stay on top of what your brokers are saying and try to understand, why are they doing that? Why are they trying to be risk averse? Why can't you be risk averse as a trader? Same thing. Why do you have to fight them and saying, I know I want more leverage. I want more, smaller margins for each trade so I can trade even bigger. Stay safe. It's better to stay safe.
Yeah, so we can take hints, take cues from our brokers.
Yeah, absolutely.
That's also sound advice. Yeah, makes sense. Yeah, and staying safe. Well, yeah, and that's the coronavirus.
It's a unique market for sure. So it's if you're involved in this market, obviously please at as much as you can trade, learn, document, so you can grow from this, because these type of scenarios are repeated in the market every 10 years or 15 years. They come along. So it's not a bad time to be here. You can't think of this market as, oh my God, the world's going to end. Let me just do whatever I can now. If you ask any veteran trader, they know that, okay, we're in that cycle now. Now we're in a good cycle. Now we're in a bad cycle. It's normal. The market goes through these phases. And it's good to stay on top of these things and learn how you are supposed to adapt and how much is good enough and how risky is pretty risky. So when you build that formula for yourself of, okay, this is how much I'm going to extend myself during the season, then you're pretty solid. You're pretty solid. So these 3 months, I'm sure a lot of you guys have probably made your year's worth of money. And for those of you who are new, obviously, reach out to seasoned traders, reach out to them, find out, how are they approaching the markets? When will they stop trading the way they're trading? So whatever strategy you're learning from these guys or mentors or whatnot, just be careful on, will that strategy need to be adjusted when the season ends?
Yeah, and we never know exactly when that season ends. So
yes.
But we have to be ready for that to happen, because this high volatility will not stay forever, or well, in relative terms, now we have slightly lower volatility apart from oil today.
Yeah. Oil's a unique one right now.
Yeah, but these things come and go, and to be prepared for all kinds of situations.
Absolutely.
All right, I think we can wrap it up. Well, it's been an absolute pleasure. Thank you very much for dedicating this time to me, to FX Street.
Absolutely. Thank you for having me. It's when you reached out, I was like, oh man, it's an honor to be on your interview with you. I used to read your stuff like in 2010. I was reading your articles and stuff. And I've seen your name time and time again. So it was very nice to hear from you, and a pleasure to be here. Thank you very much.
My pleasure. We'll edit it. Post it on the site, and I'll send you the link.
Okay, sure. Okay. Thank you very much. Thank you for having me.
Thank you very much, Navin.
Thank you. Have a good day.
You too. Bye-bye.
Bye.